Speculation versus reality. Decoding Bitcoin's fate amidst rate cut uncertainty. And yeah, we're not talking about uncertainty of whether or not there's going to be a rate cut. The uncertainty seems to be over the amount of that rate cut. Hey guys, it's Keith Allen. And hey, sorry I was not able to post an analysis yesterday, but the Bit Break is back today. And gosh, before we climb in, well, of course, the normal housekeeping. I want to remind you guys, if you like the stream, do me a favor, smash all the buttons. Be sure and share a comment too, because I love those comments. I engage with each and every one of them. I'm going to give you a moment to go ahead and tick that little bell up top and make sure you subscribe so you never miss any of these. And let's climb into this thing because price is moving as we speak. In fact, pretty much all classes are buying and Bitcoin price is going vertical at the moment. Is this short-lived? We're going to find out. Of course, rate cuts coming scheduled for tomorrow. The big debate over whether it's 25 basis points or 50 basis points all remains to be seen. And we are going to do our best to look past the speculation and focus on data that can give us some clues. And then at the moment, the clue is pretty clear at the moment, at least for today. And that is that Bitcoin is well on its way up. As you can see, the liquidity that was cleared out yesterday on the way down is being exploited on the way up. And we're seeing shorts get squeezed in a big way. Lots of speculation over what was going to happen or what is going to happen tomorrow. The FOMC meeting underway now, rate decision coming out tomorrow. And I mean, it has been literally all over the place. I think last month we were up to, I think, I don't know, a month ago, it was like 75% of the market thought that, had a 25 basis point rate cut in, baked in, and 25% of the market was saying 50 basis point cut. And so that changed a little bit. In fact, it went even higher to the 25 basis point cut camp since then. And then, last week it cut to about 66%. We're thinking 25 basis points over the weekend. We've headed into the weekend at literally a dead even 50-50 split. And then it changed like crazy. Like every few hours I would look online and it was changing. And today, so last week we were at 66%. We're saying 25 basis points over the weekend. It was 50%. And now we're at like, I don't know, 38%. I mean, it's moving. This morning when I first logged on, it was at 33%. Let's just see what it is now, because we had a little bit of economic data come out this morning on retail sales and autos and the Red Book, which came out looking pretty good. And so what does that mean for speculation? All right. So first it was 33, then it was 37. Let's see if it's changed since last time I refreshed this, which has been, maybe an hour. Okay. Now 41%. I mean, this is constantly changing. So in my opinion, it is absolutely pointless to speculate on what they're going to do. I think everybody anticipates the cut. The cut is 100% baked in. Whether it's 25 basis points or 50 basis points, how much does it matter? Coming into this, I was, in the camp that, a 50 basis point cut would allude to a bigger, potentially scare the market, hinting towards, a potentially bigger problem on the backside of this. And so my thought was 25 basis points is slow and methodical. That's really what Powell has been telegraphing since we got into this mess. And I think that's where they really want to go. Of course, there's been some split decision in the FOMC in the committee over 50 basis points or 25. And then over the weekend, or maybe yesterday, I hear some noise about a 75 basis point cut from Senator Elizabeth Warren, which is just freaking ridiculous. Okay. For a myriad of reasons. Number one, stay in your lane, woman, and stay out of the Fed's business. Okay. There's no benefit. In fact, if we get into a pattern of the Fed reacting to every politician, we got serious problems. So that's first and foremost. Secondly, I think a 75 basis point cut would absolutely send panic and fear through the market that there is a bigger concern of a hard landing and a deep recession coming after this is all said and done. Of course, we also have an election coming up in November, which could change things. But that's really where my head is at. Edgar also going 25 basis points for the win, and we could literally see this flip completely back to an advantage for the 25 basis point cut by the time we get here tomorrow. We're now a little more than 24 hours away from when this rate decision is going to be announced. So I'll keep watching this for whatever it's worth. I don't know. It's entertainment value. It's just funny to me that the market is this indecisive, and that people are speculating and trading on this. So the other thing that freaks me out a little bit is that there seems to be sentiment that the market always dumps on rate cuts, and that's just not the case. And we can speculate on that, but why speculate when we can actually look at the data? And it's worth noting that Bitcoin doesn't really have enough history to really make any solid decisions on, because as you can see here, the purple line, Bitcoin, we've really only had one set of rate cuts, and that was in response to the COVID crash. Okay. So not enough history for Bitcoin, but we can look at the S&P 500, which has over 150 years of history, which happens to be in all-time high territory once again. And so, are we going to see a dump on tomorrow's decision, or are we going to see a pump, or might we see things just consolidate and level off a little bit as we spiral towards the November election? So I want to share with you here what I have on this chart, which shows the S&P 500. That's the candle chart. It shows the unemployment rate here in blue, and we know that the Fed tends to cut rates when unemployment is going up. That's kind of that's the hammer. That's the tool they use, and we did see an uptick in unemployment. And also, it's notable that once unemployment starts to go up, it tends to trend up. And so the Fed has told us a couple weeks ago that they do not welcome an increase in unemployment. So they're trying to curtail that. I don't know that that's going to be possible. I think at this point, it's a matter of, can they keep it under control, right? Maybe because maybe it bumps up to 4.5. Keeping a 5 handle off of it would be just a huge victory, in my opinion, if they're able to do that. But here you can see, this isn't obviously every single rate cut, but it is a lot of them that have happened since back to 1957. I think that's far enough, right? And so I pretty much marked, the bigger, the initial cuts, and then, maybe a couple of them along the way, right? Because things changed. And so here you can see that the green ones indicate when the market went up after a cut. Blue ones were kind of consolidation, and red ones, the market went down after the cut. And if we look through this, we can see there's actually a lot more green than red over history. In fact, according to I ran this analysis through AI, and again, this isn't every single cut, but it is certainly a lot of them. And what we're seeing here is that over time, about 70% of these cuts delivered an uptrend in the market. Okay, and so here we got a little bit more granular with when things were happening, but on these larger cuts, of course, you can see, right? This was a downtrend. Things leveled off, and then we went to the uptrend, and there were more cuts, right? So there were consecutive cuts, and it really seems to be, what is the outlook, right? So the market knew these cuts. Number one, some of the variables are: does the market anticipate the cut? Know what the cut's going to be, when it's coming, why it's coming, and what is the outlook beyond the cut? Well, this has been telegraphed for a very long time, right? Since Jackson Hole, we knew that this meeting was happening this week, and that this decision was going to be made this week. No surprise there. 25 basis points versus 50 basis points, bit of speculation there. How much does it matter? Is the camp that's in the majority going to be disappointed if they don't get there? Well, of course they're going to be disappointed if they don't hit their number, but how much is the market going to react to that? And then what is the economic outlook beyond cuts? And so the economic outlook, obviously, that's also split. Lots of debate on any given day. You can ask 10 people what their thoughts are, and you're going to get 10 different answers on what the outlook is after the cut and after the election. And of course, who wins the election will be a variable. So from there, I want to look at the fundamentals, the technicals, and the order book. Fundamentally, we know that things are still very good for Bitcoin. Fundamentally strong. We certainly have stayed within the trend. So the trend is still alive. You can see now we're actually heading up towards where the technical support, technical resistance is, right? So these are my guardrails, by the way. These are the levels, my invalidations that I'm looking at. This red 50-week moving average down here at the bottom, which is just sub 55K, and the green 21-week moving average, just sub 63K, which are serving as technical resistance and support. And if we look at the order book, we can see here on fire charts, look what's happening here, right? We have some support here. Where did we say technical support was? Right here around 55K, just sub 55K. And so at the moment, we have some bid liquidity laddered up, and the ladder's actually moving higher. This isn't very big. It's not a ton here. But the fact that it's stepping up here, giving this support is certainly notable. And you can see on the bin CVD, all classes are buying here. And so support looking pretty good here at this point. And resistance, as you can see around this level, has been degrading, right? It's been fading. If we zoom out, we can see it's faded here at 70K. And so does this mean that after the rate cut announcement, we're going to shoot up to 65? Maybe, I don't know. But what I'm watching here is the fact that if the order book does not replenish, right, as we clear out this liquidity, if bids don't move up to fill or asks don't come down, then we are, how should I say, setting the stage for some volatility, right? As you can see, this is cleared out. We've just come through this. It's cleared out. It's very easy to shoot back down to 59 in no time flat, right? So we'll want to see bids continue to move up with price. This is an easy free fall. The fact that asks, you can see, are moving up, is kind of inviting price to go with it, squeezing those shorts. And we could conceivably see, oops, sorry, didn't mean to do that. We could conceivably see things round trip before it's all said and done, right? Look at this game right here, little shenanigans. They drop it down, then they split it, they move some up, they move some down. Not a whole lot of decisiveness here. So, and if we can clear these levels, 65K, obviously, we've got some pockets of thin liquidity that will be easy to get through. But this, I think, is going to be a bigger battle. And I'm not sure it's one that's going to happen here this week. We'll see. And the reason is we have some history here at these levels, okay? Obviously, this 21-week moving average is our first level of technical resistance here, right? It's 60, just shy of 63K. Then we have this 2021 mid-cycle top here. And this is an important level that Bitcoin needs to reclaim to get back into position to go after all-time highs, right? First step of this ladder to climb up to this is to clear the 21-week moving average. Second rung is to clear the mid-cycle top and get back above that 65K level. And I would say that we might even see, this is just sub 65K. We might see um, price move up here and then get rejected from 65K and then have to work up to this. So that's conceivably possible. So we're going to be watching the bid liquidity very, very closely to see if it comes in and gives price a chance, lays some support in here to help price move back up and potentially take out the 65K level. I'm at the moment, I'm anticipating, at least today, potentially rejection, but who knows, right? That's all speculation. From there, once we can reclaim this level, um, we've got the 65K to take out. There's only about 18.5 million there. And then you can see not a lot standing between here and 70K, except, of course, that dreadful 2021 top 69K, which has just been a beast. It has been a beast since we first engaged with it back in the beginning of March when we hit a new all-time high. And then we just had rejection after rejection after rejection every time we tried to break out from this. In fact, none of these were actually good, solid candles. We had maybe one or two candles print above before the rejection came. And as you can see, trend precognition showed us it was going to knock down. It invalidated when it came through the breakout, invalidated when it dropped through, rejection from here, dropped through the 21-day moving average, and then, the rest is history. So it's going to be level by level that we first clear the 21-week moving average, then go after the 2021 mid-cycle top, then the 2021 top, and then, and only then, are we in position to really consider a legit shot at going after all-time highs. Now, if things break down, if the market doesn't like this, we could very easily go back and retest support here at the 50-day moving average, potentially lower into this double bottom. And if that doesn't hold, you then have the lower low here at 49.5, all potential targets to the downside if the market doesn't like what's happening here after rate cuts. And then, of course, the trend line, which to me is where it begins and ends. If we break through the trend line, we got bigger problems. The good news here on the fundamental, on the technical side, is we do have this golden cross between the 100 and 200 week moving averages, which, granted, it's a lagging indicator, but this likes to find, after we had all the death crosses here on the daily, we look for things to resolve, and double bottoms often mark those areas of resolution. If not, well, maybe we go deeper to the trend line or test this lower low or down to the trend line. So obviously those are the ranges here. This is the deal breaker for me in terms of the trend. But at the moment, we're trending up. We're trending up on the daily. We're trending up on the weekly. And we have a pending rate cut less than 24 hours a day away. So the market likes what it sees at the moment. Don't be fooled into thinking that whales are working to help you out right now. This is typically something that turns into a sucker punch. Okay. They're going to pump the market. They're going to lure in some late longs and some early shorts. A lot of those early shorts already got punished today. And so you have to know where your sentiment and your conviction are. For me, it is at these two moving averages, right? On the weekly. It's the 21 week for resistance. It's the 50 week for support. If we lose those, if we break those, that kind of changes the dynamic of things. For me anyways. So that's what I'm watching. Hope that gives you some insight on what to watch as well. And again, we'll revisit this thing. We will revisit, I'll keep in tune to what's happening here on fire charts for sure. And so we'll know tomorrow how the order book is setting up. Do we have enough liquidity in here to serve as guardrails and dampen volatility, or is it going to open up and we're going to see some crazy moves tomorrow? At the moment, we're seeing buying, and yeah, it's rolled off the top for a brief moment. We'll see, right? The door is open here to go higher. We'll see if we get it. Going to wrap it right there, guys. Hope you enjoyed the stream. If you like it, please do me a favor, drop a comment and share this thing. Help me grow the channel. I really, really appreciate the support you guys have shown me and continue to show me. And I will continue to keep bringing you the goods. Oh, one more thing for you guys. We have we got a special deal going on with our friends at Kingfisher. If you are a fan of the Kingfisher liquidation maps, and gosh, today's a day that we're seeing some of that happen. If you're a fan of these liquidation maps, we've partnered with Kingfisher to offer a special deal for subscribers to get 3 months free if you subscribe to a year of Material Indicators Premium Plus plan, or you subscribe to a year of the Kingfisher, you're going to get 15 months for the price of 12. So that's 3 months free. You can find links to that in I'll put a link to it in the description. You also find it on YouTube and on X and in our Telegram channels as well. Thanks again, guys. Hope you have a fantastic rest of the week. And as always, trade safe, my friends.